Hi there, this is Anne. So many people ask the same question and I have collected them. We have a section where you can ask me anything related to the Forex trading. So let's go with the most frequently asked question. How to set up Fibonacci settings? You may have seen me explaining in the video and using the Fibonacci like this. So if you want to know how to set this up, it's very easy. What you have to do, just click on the Fibonacci setting here, draw Fibonacci retracement. Or you can also click on insert and choose Fibonacci and then click the retracement, and then you just draw it anywhere and then you click on the Fibonacci until you see 3 dots, and after that you right click on any dots and click Fibo properties and you delete all the information here. You can delete it one by one. Choose one, delete, choose another, delete until it is empty. If someday you want to come back using Fibonacci, it will be easy. You just have to click defaults and then it will come back to Fibonacci. But right now, if you want to have something like this to measure for the risk-reward ratio, you can change the level 0 to become entry, level 1 for stop loss, -1 for take profit 1, -2 for take profit 3, until whatever level that you want to have. You can make it up to 100 level, but what I do is until 10, and then after that 15, 20, 30, because I barely use all. I usually just use between 1 to 15 or to 20. All right, there you go. You know how to set it up. Now, the next question, how to read market bias from higher time frame. A lot of people always want to know the market direction for them to trade in a lower time frame. It's actually very easy. If you watch the scalping video that I shared with you, I would suggest you to look at the higher time frame bias. That is the safest way. The key is just find the last breakout. That's it. In this case, where is the last breakout that is clear to you? Let's just draw it. Right there. Is that a breakout? To me, it is. Because look at that. Let me make this smaller so you can see. There you go. Let's make it bigger. Look, this candle, this red candle, closed below. To me, a breakout should be closed with the body, not just the wick. I wouldn't consider this a breakout. Let's say this wick is over here. Some people would consider this as a breakout. So it's up to you. But to me, a breakout should be with the body. So now you know the last breakout is below. That means market is in a bearish market. You can mark the last high-low in between this breakout. This is your last high and this is your last low. Just put high-low in between the breakout, and this is your trading range. Since the last breakout is going down, so the market is bearish, and then it is better for you to only focus on selling, even though here, based on daily candle, it is going up. You want to understand where is your order block. If it is breaks below, your order block is the last bullish candle before the breakout happened. For those who are new to order block trading, you can visit my YouTube channel. There is a complete guide how to trade the order blocks. You can watch it in the channel. I already created the playlist. This is a good way for you to start looking for selling opportunity within the zone, because when the market started to create a lower low, there's usually a high probability that the market could go lower. When does this bearish market become invalid? You just draw the box between your last high and last low. This is the range of your trading. If the market breaks this high, then there is a probability the market reverse and it's become bullish. As long as the market is within the range of the bearish market, you only want to focus on sell. And when to sell, that is when the order block strategy comes into play. So you can take a look for a bearish order block on the lower time frame, even though when you look at M15, for these 2 days, it keeps going up. But remember, in a higher time frame, there was a break below. Maybe it's just a retracement, and to continue down, it's only become bullish if the market break this high. So the key is, again, all you have to do, you just find the last breakout. Is it breaks below or breaks above? If it is breaks below, meaning the market is bearish, if it is breaks above, the market is bullish, and then you just draw the box, that is your trading range. And within here, you can keep looking for sell order block instead of for buy order block. If you are already advanced traders, you can also see a possibility of buy order around this area. But if you are very new to trading, I would suggest just keep following the higher time frame bias. Just wait in the lower time frame for the market to create breaks below following the higher time frame. As long as the market only keeps breaks above, just don't enter any trade, okay? You only want to start looking for sell when the market in a lower time frame start creating breaks below. If in a higher time frame, the market breaks above, and then on the lower time frames, you only want to keep looking for the market for buy opportunity once the market breaks above, and then find your order block. For the sake of example, let's see this one, okay? This one is a retracement. So let's see over here. Now let's go to H4. This is the last breaks below, right? So now the market still is going up, so no opportunity to sell. And then here, it's also still going above, no opportunity to sell for you if you are looking just on this specific area. Actually, if you already know about the order block, you can always look left if there is an order block on the left side. But I just want to show it to you when you can start selling. Now, something like this, for example, here, this is already breaks below. So this basically could be your order block. Is it valid? Yes, it is, but it just doesn't work. But again, if you follow a higher time frame, by keep selling if the price breaks below on the higher time frame, you only want to keep looking for breaks below on the lower time frame, something like this. In this instant, this one doesn't work. So now let's take a look for the past, which is here. Imagine that this one is not exist yet. So here you see the market breaks below. So this is your last high and this is your last low. Let's make it longer here. Let's start it from here. The market keeps going up. Now take a look. Here is breaks below. It's already started to break below on H4. As long as the market breaks above, you do nothing. You just want to wait the market to breaks below. Now, when it is breaks below, where is your order block? Your order block is the last bullish candle before the breakout happened, which means this one. In this instance, it doesn't hit. Now, where is the next breaks below? This one. And then your order block is the last bullish candle before the breakout happened. Now, this one, take a look. It's going down. So now this is from D1 to H4. Imagine if you want to go to H1 or if you want to trade it on M15. Let's just take a look on M15. Now the market start here, and you know that on a higher time frame, the market is breaks below. So you wait, here still breaks above, here still breaks above, and then here also breaks above. Now the market started to break below around here, and then your order block is this one. It doesn't hit. You just keep looking until you find something that is hit. Now here breaks below, and this is your order block. You know why you want to follow the higher time frame? Because when you go to lower time frame and looking for breaks below, you can easily find 1 to 10 or even more than 1 to 10. That's why when you scalping on M5, on M15, you always want to follow a higher time frame bias based on the last breaks. Either it is breaks above or breaks below. So this is a good example here. When you already find your order block, once there is breaks below like this, you can almost certain that you can put your pending order here on the order block itself, or 50% of the order block. Look, even just targeting the last break below of daily candle, it gives you more than 1 to 10. That is how you find the market bias on a higher time frame. Now I want to show it to you. What about if the market like this? First option, if you're confused and you cannot read the market bias, overall structure, I'm giving you on H4 because it's happening on H4, but you can do in whichever time frame. For example, you want to trade on M15, then you can take a look on H4. Yesterday, someone in the group was about to buy, and I said don't buy because the market is gonna go lower. But I said there is a bullish candle over here. He asked, how can you tell that it is gonna go lower? Now I'm gonna show it to you. If it is breaks above, breaks below, like this one, this is trending market, it's so easy. Look at that. Oh, this is breaks above, the market is bullish, so I will just keep looking break above on lower time frame. This is also break above because the market is trending. It's just easy to read when the market is trending. But what about if it is sideways like this? So here's the trick. When the market sideways, you want to make the box, the big box around this area. Why I said this market is gonna go lower? I said it's gonna pick this one, this order block. Look here, there is breaks above, and here is the order block. When market was around this area by the time, people thought that it's gonna go higher. I say no. Why? Take a look. The H4 here, the last high, closed lower than the previous two. When the market closed lower like this, there is higher probability the market is gonna go lower. And comparing to this one, sometimes the market gives us a clear clue like this. Look here, this one closed higher, but this is lower, and then this getting lower. So I believe the market is gonna go lower, at least still around this area to pick up this order block. Gold is like a little bit messy right now. This is one of the trick. If the market in the sideways, you just look the close candle after that. Is it higher or lower? If the candle close higher in the sideways market, so there is probability the market is gonna go higher after that. All right, but in this case, because the market is gonna go lower and retrace until here, then I know it's gonna go lower at least until this one. All right, so that's about to read higher time frame. The key in general, just look for the last breakout. It is break above or breaks below. Now let's continue to the next question. How to take advantage from your weekly market analysis? Can you show the one order block setup? I'd like to apologize. Last week I didn't do market analysis. Something kind of weird happened. I created a video using Zoom call and it keep processing for 5 days, and until now it is not working yet. I have not got a download link from them. But anyway, every week I give you market analysis based on daily chart. What I usually do when I give market analysis, I always draw, for example, this is swing high, this is swing low, and this is the last breakout, meaning the market is in a downtrend. All right, so here is the break of structure, and this is high low. So this is your range of trading. What I usually do, I mark the order block that has not been touched yet by the market, and then I ask you to set an alert. This is what I usually do. So now some people confuse what they can do with this. All right, so the moment when the price touch the order block or your alert goes up, what you want, the first thing is to measure the order block to the last low, in this case, this low. You want to find that the particular order block can give you the risk-reward ratio that you can accept. I always said that if you trade order block, you want to trade the order block that can give you at least 1:5 risk ratio, all right? In this case, it's around here, but this one is not. But here's the trick if you want to get 1:5. You put the measurement on 50% of the order block. Now, when you go to the last low, take a look. It reached 1:6. So this is a good order block. Once the order block hits the alert, you measure it. If it gives you good risk reward, you have two options. Either you snipe, go to lower time frame, or you just put pending order on a 50% on D1, and it will become a swing trading. So you can just put the stop loss over here, and then place pending order here, and then put your take profit target here at the last low. That's what you can do. Or you can snipe it. How? I will give you an example. This was weeks ago. I gave you this order block. I said this is the swing high, swing low, and this is the break of structure, and the order block is the last bullish candle before the breakout happened. And I ask you to set the alert over here, By the time this market was not exist, the last low was over here. So now what you can do, let's just check this one, the one which is already happened, because over here this is not happened yet, so I don't know how it's gonna work. This is the one which I already give you. If you were to enter this one, this is what you can do. So the moment this price touch the order block, then you can measure to the last low over here. Let me change the color here so it will not be confusing. So this green is your take profit target. This is the last low, right? You measure it, either you want to take the whole candle. Now the whole candle give you less than 1 to 4. I wouldn't take it. Now let's see if you put it at 50% of the order block, it gives you almost 1 to 8. You know, sometimes the order block is working really nicely like this. So many times you can just put on the 50% and it works nicely and hit your take profit 1 to 8. Just by placing alert on daily like this, all right? Or sometimes if you put on a 50%, it doesn't touch, only touch the lowest point of the order block and then bye-bye. But it doesn't matter because you want to get the higher risk reward. This is why I often put on a 50% of the order block candle. All right, so now what about if you want to snipe? Let's now go to H4, okay? Let's see. So this is your target profit. Now what you can do when you go to lower time frame, you want to look left first. That is what you want to do. Look left, see if there is a clear order block for you. Now take a look. This is the breaks below, right? And then here, let me just change this color. This one is order block from daily, and here your order block is the last bullish candle before the breakout happened. And then you tell me, and that's hit a stop loss. Yeah, I noticed that, but here's the thing. Sometimes the price passing the order block and it hit a stop loss. What I usually do if this happen, okay? And again, I always put the 50% of the order block. So let's say this is my entry. I put pending order on 50% of the order block from H4. Now remember, when you enter from D1, it gives you about 1 to 8. Now take a look. On H4, it gives you 1 to 10. Minus 1, so 1 to 9. So whenever the order block hit your stop loss, if you believe that the market is still going down, I usually re-enter again by placing order at the same level, the same entry level, and the same stop loss level. That's what I usually do. All right, let's try go to H1. So what happened if we go to H1? Now let's just remove this from H4. Okay, now the moment the price touch this order block, your alert goes off, right? Once this happened, look left, see if there is a very nice order block that has not been touched yet. So there are two over here. Let me just make this smaller. That is breaks below, and then also here breaks below, meaning you have two order block over here that has not been touched yet. Your order block is the last bullish candle, and here, oh sorry, this one here, I don't think the above will be hit, right? Correct. So the above is not hit. So you place pending order around here. Again, let's say you put at 50% of the order block, it hit probably one time, two times, maybe one time, I don't know. But for the sake of example, it hit two times, okay? So you lose two times, but you really have to limit your losses. If your take profit target, for example, 1 to 5, just give it 1 or 2 times maximum re-entry. If you aim 1 to 10, you can make it up to 3 times. If it is more than 1 to 10, then maybe you can limit maximum losses in a row up to 4 times. But in this instance, let's say you get 2 times losses in a row, and then the third times is winning. Now take a look. This is the take profit target from daily, right? So here's the good thing. Even though your entry from H1, but your profit target was from daily because your order block was from daily. So that's how you can take advantage of my weekly analysis. Whenever I give you weekly analysis, You just place the alert. I do my best to give you market analysis every week. I will review 28 Forex market plus futures, gold, and also cryptocurrency. I supposed to have one. I cannot post it last week for some technical issue. But anyway, that's how you do it. First, put the alert whenever I show you the order block. The moment the order block alert goes off, you can go either to H4, H1. You see, even on H1, from the daily order block, it can gives you 1 to 30. Imagine when you sniped it from M5. So now you already know whenever you get the order block from higher time frame, look left. You do not always have to wait for the order block formation because sometimes it does not happen. You can simply look left like this and find the order block that you can take. Sometimes the old order block probably already been touched, but as long as it was a valid order block, because an order block sometimes can be touched 6 times. So it doesn't matter, you can take it again. You just picked up some valid order block, pick the one which makes you feel comfortable. In this case, I would place both of them because I'm aiming 1 to 30. So anyway, that's how you take advantage of my weekly market analysis. Make sure you watch every week and you can set the alert like that. You don't have to trade every single alert. You just need 1 or 2 that is a good one and makes you feel comfortable. And then you can trade it on H1 by placing the order block like this. All right, let's go to the next question. So when it comes to scalping an order block on the 4-hour or 1 hour, are you always looking for a 5 minutes break of structure and for it to test that order block? Because many times I see price tap into the order block on higher time frame and just go up and never come back to test that 5-minute order blocks. Yes, exactly, this is like what happened. It touched and you do not find any new order block around here. Sometimes it happens. Sometimes when you look left, you do not see a clear order block over here, and then you can find around here. So you just have to look vice versa. You just have to be flexible, because if the market is exactly like math, like 1 + 1 is 2, everybody would be a millionaire right now. So that's why you have to learn the art of how the market movement and be flexible for yourself. Okay. All right. Let's continue. How many pairs you trade in total? I do not trade so many pairs. I personally only choose majors, not because it is the best, but simply because of the spread. But then if I do not get any good market, or I do not feel good with the condition of the market on major pairs, I could trade anything. But I do not trade cryptocurrency right now, nor futures. I just trade Forex majors and minors, and I do limit myself to just trade a few pairs at a time. So most of the time I just trade 1 pair, and in a day I barely trade more than 2 pairs. So let's continue. The next question. This is rather personal. Anna, thank you so much for your great effort, educational content. I was wondering if you could make a video where you speak to us in person so that your followers can get to put a face to the voice on the video. Well, I don't know, maybe not now, okay? So I'm not ready to appear in the video. Not that I'm ugly, I think I'm cute. You know why? Let me tell you something. From the very first video, I tell everyone, I'm not a guru, I'm not a mentor, I'm just a retail trader who like to share the knowledge with you, all for free. I'm not some kind of person who like to display something, because I know that a part of this question, you also ask me to show like my monitors, trading setup and everything. Let me tell you a little bit about myself, all right? My husband and I, we are not the type of person who like to flaunting what we have. We are blessed that we can retire at an early age. My husband was working in an oil company by the time before he got married with me. I personally made my first millions in my 20s by building a business from the scratch by myself. I'm not coming from a rich family, so I worked so hard and I made my first millions in early 20s. But you will never see me flaunting what I have, because I just want to live a humble life. And you will never see me checking my trade in my Lamborghini, because I don't have Lamborghini. You will also never see me trading in a private jet, because I don't do that. Even though right now I'm living in a resort, but you barely see me showing off, taking selfie there and here. You will never see me do that, because to me, I come to YouTube, I just want to share my knowledge. What I have is irrelevant. All right? So I hope you understand that. If you want to see me, let me just show it to you some pictures, okay? So that is me and my husband. And this was us when we first get married. It was about 11 years ago. Seriously, by this age, I was making millions every year. Do I look like a millionaire to you? No, I don't think I look like a millionaire, okay? And this was our last holiday just before the pandemic happened. And this was when we were about going back to Egypt from the US, just before the pandemic happened. You see, I'm not in the yacht. You are not going to see me with the Ferrari or anything. It's just me and my husband traveling. Yeah, so I'm sorry to disappoint you, but you see, I'm just a regular person. I think sharing the knowledge is more useful for you than my pictures like this. It's just irrelevant, all right? So anyway, that's all about me. And I don't want to talk about it again because it's just too personal. I just want to enjoy the freedom with my husband. So now the last question, do you have a paid course or one-on-one training? All right. Lately, a lot of people came to me and asked if I have this paid course, a book, or one-on-one training. The answer is no. So all the trading knowledge coming from me will always be free. I'm planning to create an ebook or a Kindle type of ebook about the order block trading strategy for those who like to read. And once it is available, it will also be free. So I'm not selling the course or anything. All knowledge from me will always be free. The only thing that I'm selling right now is the order block alert, which you can get it in here, orderblocksalert.com. You need to have a Telegram account here. Now, here's the thing. I sell this for $10 a month because I wanted to make it affordable for everyone. Why? Because my goal, basically for me to help the people in need and also to feed the stray cats and dogs, and some part of the income also goes to support the climate change via Stripe Climate. So if you can spend only $10 a month, that would be wonderful. And then in return, you get the order block alerts from me, which is good for you to study and also for you to get opportunities. So that's about it. This is the only thing that I sell, which is for another mission. All right, guys, I think that is all today. I hope that I answer most of the question asked. If you still have any questions, you can leave it in the comment and I will always do my best to reply. All right, that is all for now. Thank you. Bye-bye.